Welcome back to the Wisdom Lifestyle Money Show. I'm your host, Scott Dillingham. I'm really excited today. I have Lucas Jensen on the call with us today from Winter Capital. Welcome, Lucas.
Hey Scott, how's it going?
Awesome. How are you doing this morning?
Good. It's a little early, but we're doing good. We're up and going.
Yeah, and we're in different time zones. So for me, it's 9:30 Eastern, but for you, it's 6:30 Eastern, right?
Yes.
Or you're not
So,
Eastern, but
yeah.
your time, yeah. So thank you for coming on so early. Um, but what the reason I'm really excited to have you on, so a lot of Canadians are investing in the States, and we work with a lot of Americans investing in the States too, and we're essentially an investor focused brokerage. So that's kind of how I met you, is just between different deals and stuff. But I really love what you and your group are doing. And I'd love to hear your story, and then we can, enlighten the audience as to what you guys are doing and what future opportunities are there for the investors. So I'll turn it over to you.
Right on, Scott. Well, so I got into this probably about a year and a half ago.
Okay.
And I worked at Microsoft. I'm an electrical engineer by trade. Have my master's degree in electrical engineering. And I was at Microsoft, and during 2022, when all of the interest rates spiked, everybody knows all that. They also cut a lot of employees during that time as well because the interest spikes. And so I was one of the first rounds that got cut off during that time. And I spent 7 years working on Surface devices there. And so pretty much every Surface device that was out during that time, I had worked on it at some point in time, right?
Nice. That's awesome. I got the Microsoft Surface mouse and the laptop.
There you go.
That's probably you behind the scenes.
I helped design that.
Nice. Super cool.
So then I was like, I had already gone through this job getting let go before. Like back in 2008, I was out of job for almost 8 months. And I had a very young family at the time and wasn't able to find work. And so I'd gone back to school, got my degree, got the job at Microsoft. I thought everything was going great. And then, of course, I landed in the same position again, right? I'm like, well, what's going on? And I was able to get a job much, much quicker this time. And I'm still employed at that place as a senior electrical engineer designing advanced communication amplifiers for the military.
Okay.
But it showed a weakness in my strategy, right? All I am is just one job loss away from not being able to support the family, take care of the normal things. And so I'm like, okay, well, what do I replace this with? And so that's when I started jumping into real estate. And I realized that there's some economics to real estate, right?
Oh,
If you buy a single family rental, you have one door. And if that person vacates and it takes you a month to 2 months, you're on the hook for all the expenses that come along with that rental. And I'm just like, well, I can't afford to do that. That's huge risk, right? And so then I started looking at like duplexes and quadplexes and short-term rentals and stuff like that. And I'm like, okay, well, this is a little bit better, but still it's kind of in that gray area of like, it can be catastrophic, right? Because the numbers just don't work out. So the numbers really start to work out once you get above like 16 to 30 units. Then if you have a couple vacancies or you have to do turns on your units, then it's not really hurting your bottom line, your normal operating income, right? And so the numbers just worked out. So I had to try and figure out how I get those kind of deals, right?
Mm-hmm.
And so through this process, I've partnered with some really great people that have allowed me to get into positions where I can actually own some of these bigger units. We're closing on a 50-unit property in Bremerton, Washington, right next to Puget Sound Naval Shipyards that caters to the Navy and the shipyards over there and the contract workers that go over there. And that's a fantastic opportunity. And we expect to close that in like a week or two. But then it also led me to my another opportunity, the other strategy that we have, which is trying to help solve the affordability crisis in the Pacific Northwest between Portland, Oregon, and Washington. And so right now we have like a 16 unit that we're doing a condo conversion on. And the whole point of this is that we take this 16 unit apartment, we convert each individual one into condos, and then we turn around and sell them to families that are at about the 80% AMI level in the market and don't really have a whole lot of opportunities to buy places. So then what we're looking for is charities from different charity organizations to help them with their down payment. And then if they still need it, then we'll take a secondary position on their title in order to help them avoid PMI And so then
Okay.
the ultimate goal of this is to get their payment, their taxes, and their insurance, all that total cost at or around $200 to $300, maybe $400 more than what they're currently paying, to where now they can step into home ownership with a little money out of pocket, and with barely having to pay more than what they were before for the same style place, right? And so we've been doing that. My partner has been doing it much longer, but to combine total, we're over 38 years of doing this, and we put one of these projects out once a quarter, and we like to pay our investors when they help us out with this whole thing. So we're solving a problem with home affordability, but at the same time, we're rewarding people for helping us out too. And so this is a fantastic opportunity.
I love it. I love it. So like, how does that work? Is it considered like shared ownership? Like you guys still own it and that's like you're subsidizing kind of? Like, I'm just curious how an investor makes money on that.
Yeah, it's a whole process. So what we do is we set up our budgets, because there's some definitely caveats that you have to be aware of when you're doing stuff like that. Like you have responsibility for the property for 10 years after you sell them, when you condo them like that. And so what we do is we go out and we get we buy 3 different insurances. So we get the insurance on the property because we're going to be operating it while we're doing the conversions, while we're selling off the properties. So you can imagine these projects take anywhere between 12 to 24 months to fully complete. Our investors usually participate for 9 to 18 months, because what we do is we pay out our investors first before we ever get anything, and then that way they're taken care of first. But the insurances that we pull on this thing are the regular insurance, and we get also our insurance for any construction type of stuff that's going on. And then there's also a homeowner rider insurance that allows us to be able to cover the properties with a one-time cost for the next 10 years. So then if anything were to come up on these properties, like the roof starts to leak or something starts to fail that should be covered underneath these rules, then it's covered underneath insurance. And so that the way, but by that time, the only people that are really concerned about that risk is the sponsors, the ones that are still left in the deal, right? Because the investors get exited out. So it is non-equity holding. But we do a 15% preferred rate that we pay out monthly for our investors while the project's going on. And then if it's less than 12 months and once we give you back 115%, then we're good. And then and that could happen at month 9, that could happen month 10. But we at least want to do the 15% preferred annual, right? And then after 12 months, then we just pay out the 15% preferred on a monthly basis. And so then your return could be 120% or 117%, and you could have an EMX of like 1.2 or 1.7 or something like that. But the whole point is it's a short cycle with very limited risk. We build up all of our budgets. We've been doing this for a long time. And it's non-equity holding. So we try to minimize the risk as much as possible. Obviously, there's always risk in everything. There's always a chance that projects can take longer and things always come up. But we've seen a lot of the stuff in the years that we've been doing this. And so we have lots of contingencies and plans for things like that. So.
No, that's super cool. That's awesome. And it's actually a really unique strategy. Like, it's not something that you hear very often. So I think for those that are listening, it's probably piquing their interest. Like, what the heck is this? So do you have resources or anything that people can look up so they can see kind of the past projects and what you guys have done?
Oh, yeah. We have a presentation that's available via the web that we can send out on John's profile. So John is my partner, John Lane. And he has, let's see, in the last 3 years, on that particular sheet, we show 7 properties that were done. Now, he has more properties than that that he's done underneath different funds that he has. So he has a couple different funds that he does. And so the one that I'm talking about right now is the current one that him and I are working on together to try and get done.
No, that's super cool. That's awesome. And so I know you guys, because we've reviewed like a couple of deals, and I mean the things you're finding look fantastic. How do you, I mean, without giving your secrets, of course, but how do you find these deals, right? Because I mean, every investor, we all know you make money on the buy, right? And we know the properties listed online, there could be some diamonds in the rough for sure.
Yeah.
But for the most part, we know those are the weaker ones, right? The best deals are the handshake deals that never hit the market. So how do you find these deals without sharing all your secrets?
Well, we'll share secrets. It's fine.
Right.
So I'll focus briefly on. So let's see, the 50 units. Let's just take that one for example. It's up by the Puget Sound Naval Shipyards. I was prior military. I served in the Navy for 6 years. I was a nuclear engineer in the Navy, and so I'm very familiar with Bremerton and the ports up there. And I know that there's contract workers. Tons of contract workers that have to support the shipyards. And I know that they don't all live in Bremerton, Washington, a tertiary market to Seattle, right? Nobody knows where Bremerton is unless you know the shipyards, right? And that's the primary reason. And so when I seen this opportunity, it was actually presented to me by another person who was looking for properties. And I was like, oh, this is a diamond. Like I knew it right away. It sits right on the water. I mean, you look at it and it's got a water profile in front of it, and then you see the 50 units, and I was like, well, and it's right across the bridge from where Puget Sound Naval Shipyard's entrance is and the ferry, and so you can watch the ferry like dock into Bremerton. And I'm just like, wow, this is an amazing opportunity. And then once I started hearing the business plan, it just made sense. I mean, there's no other way to do it. Like I've looked at hundreds of deals, and none of them quite worked the same as this one did, but it required knowledge. You had to understand how the shipyards work, what their workload is, what the next schedule is for the next 5 years, to really get comfortable with that strategy and know that there's room to grow, because they're getting $3,300 a unit for those 1-bedroom, 1-bathroom units in a tertiary market to Seattle, which is phenomenal, right? It's astronomical. But then there's room to grow on that one as well. We still expect to be able to move those rents up by at least $300 per unit, at least over the next 2 years, right? And if we do that, then I mean, we're in huge profit mode with that. So,
absolutely. Yeah, and for those that are listening, those are furnished units.
Yeah, fully furnished. Yeah, and so the contractors send their people to us to stay while they're working there, and then oftentimes they'll have like rental vans, and they all carpool over to the shipyards together, and they come back together. They hold meetings in our common area. It's a unique experience, right? And so that's what really kind of piqued my interest on that one.
I love it. And I don't think I told you this. Maybe I did in past conversations. I'm not sure. But one of my very, very first rentals, I did as an executive furnished rentals. I had a property manager that specialized in having people that come, out of town for specialized projects. And I'm telling you, you already know, but it's at least 2 to 3 times more rent than if it was just a regular, rental unit on the market. Obviously, you got to buy furniture and linens and all that good stuff, right? But it's an incredible investment for sure. Yeah,
and one thing, the risk with some of this stuff is, well, a lot of it is that you do have sometimes a higher vacancy rate with some of these furnished finders, especially if they're like for executive level and things like that. With this particular property, because the demand, the workload that's there, we're at 97% occupancy with a 10 to 15 person wait list on a regular basis, right? And people are staying in hotels until they can stay in our place, and it's like that's a great problem to have, right? And so we're going to be building off of that strategy and getting more units and properties up in that area to be able to deploy a similar strategy, not the same, because you can't really replicate this particular property because it's right on the water. It's right next to the Puget Sound Naval Shipyards. It's 50 units. It's one of the bigger units in that area. So replicating is not what we're trying to do, but maybe creating a small offshoot that complements it, right? And so that's what we're looking at right now. It's one of our strategies going forward. We should have an opportunity for that here soon.
Super cool.
But then for the condos, for converting, we're just taking advantage of the local laws. So if nobody's familiar with like local laws in the Pacific Northwest, they suck for landlords. Right?
I've heard. Avoid the blue areas. That's what they say.
Yeah, I mean, so in Tacoma, in Seattle, and in Portland, they have really crazy laws. Like you can't, and it's not. I wouldn't say they're crazy because they're humanitarian, right? You can't move somebody out in the middle of winter. And it gets cold up here, right? That makes sense. Okay. If you have school-age children living with you and you're defaulting, then you cannot be kicked out during the school year to make sure that children don't get moved out of their places, right? So a lot of these things make sense, but at the same time, when you put all this onto a landlord that has running a business, right, it becomes very, very difficult.
That's right.
And so there are ways to kind of get around these things, but because of all these little laws that are going into place and the way that you have to, in Burien, you have to pay for somebody's if they're in default and you're kicking them out, you have to pay for their moving costs. That's a law. Like that one, yeah. I'm not a big fan of, right? But when you start looking at these laws, you go, okay, well, what is this creating? It's creating a huge exit in multifamily, right? So people don't want to own and operate multifamily in these areas. So we're getting really good values on some of these properties and finding some really good opportunities in there where people just don't want to manage and operate these things. So we're taking advantage of that and we're converting them into condos and then sell them off. And so
I love it. I love it. So you're still investing, but you're not bending the rules, but you're tweaking it so that way the rules and the laws that have come out don't necessarily impact you because you're doing a different investment style. So I like that.
And we're also helping the community too. I mean, that's one thing that really, really appealed to me when I was going through this is I can do what I like to do, which is investing, doing capitalism, right? And at the same time, when I'm done, if we have 15 units, 16 units, I have 16 families that are now homeowners where they weren't before, right? Yeah. And it's all impossible because of how we run this and because of our efficiencies with how we're able to do this, that we're able to make money and also help people out. So.
Yeah, no, I like that. It's really a win-win. I mean, we hear of programs with subsidized rent and stuff, but subsidized essentially home ownership, right? I think that's really cool. And I know you talked about some returns, and obviously returns are not guaranteed, but I mean, the numbers that you threw out here are, solid for being able to help, people enter the market. Yes. So I think that's incredible. And then we had, Freddie and Fannie buying all these bonds, right? $200 billion worth of bonds. So that's going to lower the rates and help it make it a little easier for homeowners to enter as well. So that's great. No, super cool. So I wanted you on here because I know you guys are doing fantastic things. Like I said, I've seen multiple deals and projects that you guys are doing, and I definitely think it's investor worthy. And this is why I wanted to have you on so we could talk about this. But how does that work for an investor? So say someone's listening to this and they're like, I love what Lucas is doing. I want to invest with him or potentially invest or move forward. Like, what would the next steps be? What would that look like for someone?
Well, they'd have to reach out to me. I mean, this is about a long-term partnership. So, I mean, even if somebody's got a bunch of money, if we're not aligned in what we see as opportunity in the future or what we're currently doing for a business plan, then I wouldn't recommend investing with me. I mean, this is a partnership thing, and it's built on trust. And so we need to be able to make sure that you understand our business plan and what we plan on doing, and then are okay with the returns and the time frame in which the returns come back, and that those all align with their goals. And then once we figure that out, then we can start talking about the different opportunities. But I mean, honestly, for the condo deals, we have lots of investors that are waiting to jump into the next opportunity. And since it's once a quarter, that gives an opportunity for other people to kind of sneak into there. But we usually only get maybe 1 to 3 people that are new, that have never done it before. They get the opportunity to jump in. Usually most of it's just capital that's rolling over, because if once a quarter you have an opportunity to earn 15%, right, which is what most people are promising on some of these longer term multifamilies with a 15% IRR. But that IRR, when you break that down over time, what they're doing is they're saying, okay, well, we're going to pay you 6 or 8% cash on cash up front, right? And then at year 3 or year 4, we're going to refinance or we're going to sell it, and then you're going to get this huge lump sum. But while you're doing that, the cash you're actually receiving is only 6 or 8%. Whereas this one, we're treating it more as what's called mezzanine debt. It's just a secondary layer where our investors are coming in non-equity, and then we're just paying them out a handsome share for their participation. And since it's preferred, it's not, there's nothing guaranteed, but a preferred rate means that you have a preferred place within the payment stack. So we owe the money to the debt first, the senior debt first, and the second person that is the investors. And so that's the order that has to get paid out before the sponsors get paid. So.
Yep. No, I love it. And then also for somebody hearing this and say they want to partner and move forward, what is sort of the minimum investment? Because that's the other thing too, right? We don't want people to get excited and reach out to you, but then they don't have the capital, right?
We look for $25,000 as the minimum investment typically.
Okay.
And then we run these as 506C, so it is for accredited investors only.
Okay.
And so that's one thing. If we do B offerings, you would never hear about it unless you had already known me, because that doesn't allow us to actually advertise and talk about the deals. So there's very few opportunities that we run as 506B, but every once in a while we do. So.
Okay. So no, that's fantastic. So how do people reach you? So we've got to wrap up the show here, but how do people reach you? And then we'll go from there.
They can email me at lucas.jensen, lucas.jensen at wintercapitalllc.com.
Okay.
Or they can reach out over phone too. 425-531-0777.
Perfect. And what I'll do for those that maybe they're traveling and they can't write this down or whatever, it'll be in the show notes. I'll leave it in the show notes so you can reach out to Lucas directly. I know you've got a website, and I know generally as there's new projects, right, you will create a website or a deal deck or whatever for people to review. And there's an option there to join your email newsletter, I saw. So I think that's probably how you let them know about the deals, I'm assuming.
Yes.
Yeah. Perfect. So that'd be.
Yeah, we're now I'm actually designing and creating the next generation of our underwriting tools. So we actually should have some pretty cool stuff. I've been waiting to have that finished up to do our deal room. But
super cool.
Yeah. So hopefully I'll have all that in there in the deal room here pretty soon. So that should be up and running.
Love it. If this is a side note, and I'm putting it out here in public, but if you need help with that or whatever, or some type of collaboration, let me know, because we're also simultaneously building a tool that allows us to upload documents and everything, and it'll analyze everything and then let us know precisely how much the borrower could qualify for. Obviously, we're going to double check everything, but with AI and using all the tools available, we're going to have that as like an optimized stack to speed up our process. So
it's quite amazing. I mean, I was able to take a spreadsheet and turn it into an app in less than 48 hours. And now it's just about validating, making sure that all of the numbers make sense and all that. And it's getting super close. It's just, AI is pretty special.
Yeah. No, it is. I can't believe the things that you can do. We actually, I'm not going to say it publicly, but we made like a marketing tool with AI, and it's incredible.
Yeah.
So
it's amazing. We'll have to spend some time offline and I'll show you my stuff. You can show me yours, and learning stuff.
All right. Sounds good, Lucas. Well, thank you so much. I greatly appreciate you for joining us and letting the investors know what's going on. And we'll put your details in the show notes. And I hope you have a fantastic day.
Yeah. Thank you for having me, Scott. I really appreciate it.
No problem. Take care.
You too. Bye.